India's economy is facing a storm unlike any we've seen in years. Currency crashes, markets stumble, foreign investors flee, and oil prices are surging all at the same time. This is not just a slowdown, this is a crisis in motion. First, India's forex reserves have taken a sharp hit, falling sharply from $728 billion to $716 billion in a single week. That's nearly $12 billion wiped out as the Reserve Bank of India intervened, selling dollars to defend the rupee, and the rupee, it crashed to a record 92.5 against the US dollar, breaking its own previous record. Remember, Bloomberg has already reported it was Asia's worst performing currency in 2025, and the slide continues, signaling deepening concerns among investors. The markets are also feeling the impact. The Sensex fell 1.93%, Nifty 50 dropped 2%, and in 1 week investors lost over $216 billion. That's the steepest weekly fall in nearly 6 years since the COVID crash in May 2020. A stark reminder of how fragile sentiment can get when multiple crises collide. The trigger: oil prices. Brent crude briefly crossed $100 per barrel as conflicts in Iran, Qatar, and the UAE disrupt supply and threaten the Strait of Hormuz. India imports nearly 90% of its crude, so every jump in oil hits inflation, the cost of living, and the country's growth outlook. Foreign investors are pulling out in record numbers. FIIs have sold $5.7 billion in March alone. On a year-to-date basis, FPIs have offloaded over $7 billion following last year's $18 billion exit. This is not just selling, it's a historic flight of capital. Put it all together, and India faces a perfect storm. A weak rupee, plummeting reserves, surging oil, and record foreign outflows, all striking at the same time. The RBI is intervening, but with global tensions, this is not an easy fix. Inflation is rising, growth is under threat, and investor confidence is shaken. India stands at a critical crossroads, and the coming weeks will decide whether the economy can weather this storm or whether this turbulence becomes the new normal.